I'm Grace, and you're listening to Bread and Honey, the money podcast where we chat to influential people in the financial space about everything and anything related to your personal finances, brought to you by our friends at MRBL. Each episode will discuss topics from credit scores, budgeting, savings, and much more to help line you up for financial success. So November marks the 10th anniversary for Financial Literacy Month. Financial Literacy Month helps to highlight the importance of financial education and aims to teach people how to establish and maintain healthy financial habits. If you're looking to brush up on your financial literacy knowledge, you can now enroll in Mastro by MRBL. Mastro provides you with free educational courses with over 30 different modules covering debt, budgeting, and improving your credit score. To enroll now, visit our website at learn.mymrbl.ca. Today, we're joined by Ross Taylor. Ross is no stranger to the financial literacy world with his website askross.ca and after winning Financial Literacy Leader of the Year in 2017. Alongside this, and many other achievements Ross has received throughout his career, Ross is one of Canada's most trusted and knowledgeable mortgage specialists with over 30 years' experience as a leading expert. Today, Ross discusses with Patricia and I about the importance of financial literacy in education. We also discuss how you can better your budget, whether it's through investing or saving. And lastly, we discuss the first steps you need to take to achieve the Canadian dream of owning your own home. I hope you enjoy. So for today, we have a very special show. So in honour of the 10th anniversary of Financial Literacy Month. So you're probably wondering, what is Financial Literacy Month? But firstly, we just want to welcome to our show Patricia, who is our financial guru, author, and credit expert. And also in honour of this month, we want to welcome Ross Taylor to the show, who is mortgage specialist, credit counsellor. He's been nominated for numerous awards in the financial space and also is the winner of Financial Literacy Leader of the Year in 2017. So welcome, Ross, to the show.
Thanks very much, Grace. It's great to be here.
Yeah, it's good to have you here, and welcome Patricia then as well as always.
Thank you, Grace.
So Ross, just for our listeners who may not know about yourself, so can you tell us a bit about your background, your education, and what led you to do what you do today?
I think I stumbled into it, Grace, but anyway, I'll give you the history. In terms of education, I have a maths degree from Waterloo, and then I did an MBA in finance. And that led me to my first real job, which was a stockbroker way back in the day. That was my first entry into financial services. And from there, I just sort of hopscotched over to different things. So after a few years, I opened up a fee-based financial planning business, which was pretty much ahead of its time back then, but was really interesting. I also offered computerized tax returns back in the day. That's when computers were a novelty. There, I'm dating myself for you. One thing led to the other, and I ended up joining a company, a small trust company. It was based in Edmonton. It was called Metropolitan Trust. I ended up becoming a vice president of retail banking there. And I also was responsible for their mutual fund company. And we enjoyed a great period of growth in the early 90s during that time. So yeah, my roots go back a long way in financial services. I took a break for several years and worked for a high-tech company in the late 90s. But since then, I've been back to my roots, and I focus primarily on mortgage brokering and credit counseling, dealing with individuals, and just love it. I love seeing, the before and after, if you will, as you transfer knowledge and experience to people and the benefit it makes to their lives. So at some point about 10 years ago, I also decided I should start writing down my thoughts. I'm sort of a natural educator, I guess, and that led to me publishing hundreds and hundreds of articles, mostly at my own blog, but also in other places too. And that's what led to winning that award from the Mortgage Professionals Canada a few years ago. Sort of a participation award for all the content I created over the years. That's me.
Okay, yeah, that sounds amazing. And that's all your blog content is at askross.ca then, that's correct.
That's right, yes.
Yeah, cool. And so what would be, I know you mentioned that, it's really good in your job, helping people and, seeing the results at the end. But what would be the hardest part of your job? Because I'm sure it isn't easy, you're probably dealing with people who are in, quite difficult financial situations. So what would be the most difficult part of your job?
I'm not afraid of difficult financial situations because I always believe that everybody's situation can be improved if they have a desire to do it and they're willing to follow your lead. Almost every case can be made better. I think what's hard is I'm in the mortgage industry primarily, and it's actually difficult for the everyday consumer to understand and follow. There's so many rules and guidelines. They're constantly changing, document requirements, things like that. It's hard to become expert at that. And yet it's the biggest financial transaction that everybody will face. And we've made it difficult for people because there aren't consistent approaches from lender to lender. So making sure that the people I'm working with are working for, I should say, understand the things that are important for their circumstances, because it's not a one size fits all. Making sure they understand what they need to know and making sure that they follow along from A to Z and get the result that they're looking for. That's the hard part.
Yeah, no, that's it. And that brings us, I suppose, to Financial Literacy Month. So I suppose for listeners who may not know, Financial Literacy Month, it aims to help Canadians learn how to manage your finances, whether it's keeping track of your spending and money, minimising your debt, setting up an emergency fund, and understanding the financial products and services that are available to you. So the list goes on from there. And financial literacy is very much needed in these times, and to be honest, in any times. But firstly, financial literacy, it is a broad term. And Ross, I listened to your acceptance speech for your Financial Literacy Leader of the Year award. You actually mentioned how a lot of people, they believe they're financially literate. But in most cases, people are not. And especially when it comes to, say, millennials, where I think you said that the fall rate is around 70%. This is a global issue, and it's quite shocking to see these high numbers of people not understanding their finances. And to be honest, I'm probably right there with them. And as much as I believe I understand how things work, I probably don't. So this comes to my first questions then to both you and Patricia. So what is your stance on what financial literacy is, and what does it mean to be financially literate?
I actually find the term financial literacy to be unfortunate. I think it intimidates people. It sounds Shakespearean or something like that. I think better to say, what about financial basics? That's what people need to understand. As I reflect back on all the thousands of people I've helped and talked to over the years, it's mostly either their good fortune, if they were born into a family that really cared about this stuff and taught them and showed them the way, or if they're self-starters who really had a burning desire to learn it, because there's an incredible amount of information that's now available to us online that just wasn't available for the previous generations. So if you're one of those two groups, you're fine. But the problem with that is it shouldn't be like that. Everybody should have access to the same information, and it starts with the education process, making it important right in the school system and the early schooling, not in the high schooling. So financial literacy, to me, is really, you could even boil it down to one thing: spend less than you make. It's, because if people all did that, many of them would be a lot better off than they actually are. Because so many people, of course, are relying on credit, or they're failing in ways to keep themselves afloat. So number one thing about being financially literate is spend less than you make. And with the extra money, learn how to invest that either for your future or to promote a better version of yourself that will allow you to make more money.
I totally agree with Ross. There's a lot of clients that come in, they're not financially savvy. A lot of clients are scared, don't know where to turn, they're embarrassed. There are a lot of clients whose parents are always arguing over money. And it has such an effect on the clients because they don't understand money, so they figure it's part of life. And what I think that parents need to involve their kids in, because money is the biggest source of stress in family. So they need to involve the kids in what's going on, why they didn't have that extra money to give to the clients to buy that extra beautiful pair of shoes. And I had a client that, one of her his co-workers told him to come and see me. He showed up in my office with his wife and his 3 teenage daughters. And we did a budgeting, but we made it fun. We were laughing, we were talking, and the kids didn't realize the stress the parents were under because the parents didn't discuss it with their kids. And one daughter who always loved to save, never liked to spend, said, Dad, I actually have $10,000 I can help you out. And the tears, the laughter, the hugging, it brought that family together. The ability to understand financing, personal financing, where you're financially and where you are financially, where you want to be in the future, speaking with your family members, doing budgeting with them, playing a game with them, and communication in the family.
Yeah, no, I completely agree, to be honest. The communication is key within the family, especially when, you're wanting to teach your kids about finances as well, I suppose. From there, what aspects of personal finances do you feel are most important or most essential? I know, Ross, you mentioned, spend less and save more. What other aspects do you think our listeners can research in order to start with their financial basics?
Sticking with those themes for a second, the only way you're going to know is if you're tracking everything. So even to this day, and even though I don't technically need to, I actually track all of my expenses every day. I write them down. It's a habit I learned early on when things weren't so good and when I absolutely had to do it. And I never lost track of it. I can tell you, you can give me a month and a year and I'll tell you how much I made and how much I spent. Maybe that sounds a little bit excessive, but I can tell you it really is an effective way of ensuring that you're always on the right side of the ledger. So the budgeting thing is huge. Credit, learn to use credit as a vehicle to build up your worthiness in the eyes of lenders for when it really matters, but not as an extended source of income. So there's a whole other lesson that could be done here on managing credit. I don't think that's on topic necessarily, but it's hugely important that you learn to use credit as a tool, but not as an income enabler. Once you've figured out the budgeting and the savings aspect, then you need to figure out, how do I save optimally, especially in this day and age, because even if you can find a GIC or a high rate savings account at the bank, the interest rates are the lowest we've seen, I think, in our lifetimes, right, Patricia? So
that's right.
You're just not going to build up any wealth. In fact, after taxes and inflation, if you put your money in the bank, you're a loser. So you have to learn about investing, whether that's investing in real estate and saving towards that, or investing in the equity markets. These are the things that will ultimately allow you to take it to the next level once you've comfortably learned to live within your means.
I'm personally interested in investing. And for example, what would be the first place I'd go to invest? I don't know, would I have to have a minimum amount of money to invest, or how do I get started really in investing?
Well, I'm a big fan of managed money. And I think a lot of millennials right now, especially with time on their hands during COVID-19, are actually starting to do trading on the stock market. I mean, it's easy to get information and they might get lucky. They might have a few wins, but I really don't think that's the prudent thing to do. Managed money. Mutual funds. Actually, I personally prefer exchange traded funds. And those are they're like mutual funds, but they invest in specific sectors. So if you decide, for example, yourself, Grace, you know what, I'd really like to buy some Facebook and Amazon and Zoom Technologies and all these great companies I'm hearing about, but the shares are so expensive. You can actually find a financial product, an exchange traded fund that will invest in specifically technology stocks. For myself, I'm a little bit older. I'm more looking for dividend yield and safety. I might invest in an exchange traded fund that invests, say, in the Canadian charter banks or utility companies. There's different funds for different slices of life. You can probably get in with as little as $1,000, and you can build up your wealth in something called a tax-free savings account. And that way, as you start to make money, you won't be paying taxes on the gains. So yeah, managed money is how I would go about it. And I would also look at setting up a systematic investment program. So allocate a certain amount of money every month into going into those funds. And again, I started talking about this to people in the mid 80s, and it's staggering how much money people were able to accumulate back then just from even investing what we used to call their baby bonus checks, child tax benefit, right?
That's true.
Yes, but it really adds up over time.
Yeah, that's amazing. Like investing is probably something that would be useful to learn at a younger age. Which brings us to, I know recently that the Alberta government has taken a really proactive approach and have introduced financial literacy courses for grades 3 to 12. And these are taught by Enriched Academy, which is a Canadian organisation, I'm sure you're both aware already, that provides financial education to people of all ages. I just think that's amazing because it's so important to teach kids about their finances from a young age. So I just want to ask both of yourselves, what do you think the curriculum is going to look like for these courses? I'm not sure of the age group of grades 3 to 12. I'm sure it's probably 8 to 11, maybe in and around. Would I be correct?
Well, grade 3 might be around age 8, but grade 12 will be as old as 17 or 18 years old. So it sounds like they're promoting a training session right through the school program, which is great.
Yes.
Yeah. Yeah, it's amazing. And what sort of topics do you think would be touched on then for these courses, since there's such a wide age group as well? That's something that I find quite interesting, how to effectively teach kids how to manage their finances, especially if it's in the education system.
Grace, I think it should start at home first. I totally believe in it because my 11-year-old grandson has got an income and expense worksheet. And every time he wants to buy something, he's got to he wants something, he has to work for it in the house. So he has to invoice me. I got him to start invoicing me for chores to be done. And we put it in his income, his expenses, and we have a lot of fun doing it. And Grandma, you didn't give me my $45. Oh, but it's cost $50. You need to work for another $5. So we have a lot of fun, and because of it, I think we're instilling in him what is cash flow, how much money do you need to earn, how can you earn it, and make it fun for him. Because when I was a little kid, my dad instilled that in me because he was an accountant. He always have us saving our money, but not all 5 fingers, as my dad says, made equally. So I may save, but my brother, who loves to spend, would figure a way to come to me to get my money to buy, for instance, he had a fish tank and he wanted my money to buy these colorful fish. And so finally I gave in, saw the fish floating, and what I'm seeing is my money floating. And the next thing you know, it's down the toilet bowl and so is my money. So these are the fun things we do as children, and growing up. Having a dad as an accountant always instilled in me, and as Ross clearly stated, every day we do our budget. Every day I have money coming in, where it's going. I have this beautiful app that looks like a little piggy where I found online, and I use it all the time. And during COVID, I found that I was able to save a lot more because we're not running around going to work. We're at home spending that quality time, which we should have done in the past, to be able to understand where our money, you're making a lot, but you're spending a lot. And how can you save it? So it was a great experience over the last 8 months.
You actually touched on something, Patricia, that I'd like to reinforce. I'm a firm believer in having children earn money as quickly as possible, whether it's through a paper route or delivering catalogs or whatever. Even if it's working in the family business, teach them that with work comes rewards, and make sure they don't become those kids that are just always got their hand out whenever they need something. I think that will serve them well when they get to adulthood. The other thing is I always like to teach them how much things cost. And you touched on this earlier with your grandchild, but really, I used to take them shopping, and I would have them pick things out, and then I'd show them how much money we would have in the wallet. And when they get to the cash register, I'd let them take the lead. And often we'd have more on the trolley than we actually have money for. So then they'd be forced to make decisions about what to live without. Of course, they'd want to take out all the staples and essentials and keep all the goodies, but but no, eventually they realize it's all about appreciating and understanding money, having a healthy respect for it. Because at the end of the day, no one's going to do it for you. You have to do it for yourself. And the sooner you realize that, the sooner you'll be in control of your life. Too many people are in stress over this. We're talking like it's no big deal, but we all know on this call, it's very hard. And we're living in one of the more expensive cities in the world. So I don't want to make it seem like, this is easy, but it's doable. But you really have to make it a job for yourself. You have to say, this is important. I'm not going to let money beat me. I'm going to beat it, and I'm going to engage with it and make my life work.
Okay. And for people then listening at home who have kids and are wondering, what's the first step that I can take to try integrate good financial practices in my home?
Piggy banks?
Yeah, I suppose that's a good one, an obvious one. I suppose like the things like chores, like Patricia, what you're doing is a really good idea, like chores and, not just giving, them letting their hand out and expecting money, having to work for it, I suppose is probably the best way to integrate good financial practices at home.
Grace, not all the kids are made equally. Of my 3 kids, my son is very good at managing money. He doesn't talk about it, but boy, does he have a huge bank account. My oldest daughter has a heart of gold. And doesn't matter how much you teach her about budgeting and someone comes to the door, out it goes. Or she's somewhere and someone's on the street, she helps him first. If you look at her, you think she's as poor as a doormat, as poor as ever. And my youngest is everything me. She does budgeting. It comes second nature to her. She's looking at investing in all types of investments. So, like I said, not all the kids are made equally. They all each have their own personality.
But yeah, so I know for a lot of people, one of the biggest purchases, to be honest, for everyone, is having a house. So mortgage debt has been growing to an astronomical amount over the past couple of decades in Canada. There are many aspects to buying a house, such as saving for your down payment, choosing a mortgage provider, having the right credit score, and so on and so forth. But since it's such an expensive purchase, which you'll be paying back probably for the next 30, 40 years, it's important to know exactly what you're getting into and to learn as much as you can about buying a house before obviously, taking the plunge. So firstly, Ross, how would somebody know that they're ready to buy a house? And, what's the first steps that they should take?
I think the first thing that happens is desire. At some point, people take a look at their circumstances, they look how much rent they're paying, and they start to understand that somebody else is benefiting from that. Somebody else is building up equity in their home from the money that we're paying as rent. And they start to learn more about that, and they realize that they're really helping somebody else's family when maybe it's time they help their own. Maybe that same amount of money that they're spending every month could be used towards their own home and their own accumulation of wealth. So there's a mindset thing that happens first. And then you have to take stock of where you are. Because if I had arranged a mortgage for everybody that called me and wanted a mortgage, I'd be comfortably retired by now. So there are a lot of people that think they're ready to buy a home, but in fact, they're not. They have to sort of get their ducks lined up first, Grace. So there's a few things, and you touched on them in the opener there, but I'll just sort of replay them. You need to have a stable job and stable income, because the lenders are going to look at that and use that to determine how much you might qualify for when it comes to borrowing a mortgage. You also need to take care of and nurture your personal credit history, because that's going to come back and haunt you if you haven't. They will check your credit. They will look at how responsible you are with managing things like car payments, credit card payments, student loans, various things like that. If you've got a history of forgetfulness about making payments, or you got into a fight with Rogers or Bell and never paid that bill, that's going to come back and haunt you. So reviewing and your credit history and making sure that it's at a minimum threshold, and you can research to see what that might be in order to qualify. That's the second thing. Houses don't grow on trees. Even when you borrow with a minimum down payment, you're going to need at least 5% of the purchase price saved up, more because you also have to allow money for closing costs. So if you're looking to buy a property, and we're in the GTA here, so we're unfortunately, it's going to cost a lot more than, say, if you're buying in New Brunswick or Nova Scotia or Northern Ontario. But if you're looking to buy something here and it's costing, say, $600,000, you're going to need to have at least a $35,000 down payment. You're also going to need to have at least another $9,000 for closing costs. So, and again, more is better. One thing we've learned through COVID-19 is it's very important to have a buffer or an emergency fund, just in case you go through some kind of hiccup in your employment. But anyway, that's an absolute minimum. So is your credit good? Is your income and employment stable? And if you saved up enough money that you can qualify for a mortgage. Once you think you're satisfied those things, you need to have somebody actually run the numbers and determine how much you might qualify for. And someone like a mortgage broker or a banker that's a mortgage specialist can do those things for you. When you have all that, you then map this information, well, you present it really to a real estate agent and say, I've determined that I'm ready to buy, and here's my buying budget. Can we talk about what properties are out there and available for me and where they're located? That's kind of how you would get started, Grace.
Okay. And Patricia, then, for yourself, how did you know yourself when you were ready to buy a house? So, of course, Ross mentioned there's credit score, there's preparing down payment, there's a long list. For yourself and your own personal experience, how did you know you were ready?
Well, Grace, I didn't know I was ready. I sponsored my parents. I was bringing them over. The apartment was too small. So I didn't have mortgage brokers in those days. That's back in 1978. So I walked into the Royal Bank where I did my banking, met with a personal banker or the assistant manager at the time, and she was wonderful. She taught me first-time home buyer's plan, got me to put some money aside where I can get money back from taxes. And so I applied for my mortgage. And while I was doing that, I found a real estate agent, the first one I saw in the newspaper, called him. He showed me my first home. He asked me what I wanted. I told him I want to be next to a park, next to school for the kids. So he showed me the first home. And I said, are you going to show me any more? And he said, no, because there's 3 offers on this home, which I found out later there weren't any offers on the home. It was sitting there for 6 months, but I was so inexperienced, I believed him. I went to the bank, gave them the purchase and sale agreement, which is all new to me, and I got approved. I put my $20,000 down. The value of the property was $65,000. I had a $45,000 mortgage at 10.25% rate. Now, were there mortgage brokers out there, they would have been able to hold my hand and take away all that stress away from me. So that personal banker from the bank in 1978 is still very much my friend today.
Everyone's listening going, did she say 65,000 purchase price? Did I hear that right?
Yes, in Scarborough.
My first mortgage was at 14 5/8%. That was in 1990. And, my brother, who's a few years older than me, he got in around 19%. So when people are...
I remember those days.
People today are saying, what? 1.8? Can't you do better? I said, well, you know what? You don't know how good you have it.
Yeah, and before we got on this call, Patricia and I were actually just talking about housing price differences from, way back when. I was mentioning to Patricia about my grandfather back home in Ireland, the way he always talks about how he bought his house for 6,000 Irish pounds, which now it would probably go for like close to €1 million in, due to location and where it is. Yes. It's crazy how in times the property market has just completely changed, I suppose.
Well, the one thing that I've learned, markets come and go, and occasionally you might buy high. But if you go back to post-Second World War, real estate just keeps going up. And at any given point in time, people looked around and said, can you believe how high things are? They can't possibly get higher. But guess what? 5 or 10 years later, they did, and they are. Real estate for the long term in a good market is as sure a thing as you can have. And that's why so many people are doing that, and why it's still the great Canadian dream if you can own your own home. just getting harder and harder to do right now because prices have risen so high.
And why are, this probably sounds slightly ignorant, but why are prices continuing to rise? The property market compared to now to 10 years ago, I'm sure it's a lot more expensive. So what's causing it to rise? Yeah.
Well, there's two or three things. First, affordability is the main thing. So people are affording to buy more or spend more because, well, first of all, the average household has changed in structure over the last generation or two, where before you would have a stay-at-home spouse. Now it seems like, if there's a husband and a wife, they're both out there working, they're both producing an income that can contribute towards supporting a mortgage payment. So the more money that they have available, the more they can spend, and that puts upward pressure on house prices. The other thing, though, that's probably had the biggest impact would just be the steady decline of interest rates. From the numbers that Patricia and I were talking about a few minutes ago, they just keep going lower and lower. It was only a few years ago when we saw, maybe 10 years ago, roughly, when mortgages went south of 5%, I thought, wow, this is amazing. And then when we got the 2.99% mortgage a few years ago, can you believe that? And now here we are brokering mortgages. I just did a variable rate mortgage at 1.35% last week and a fixed rate mortgage at 1.6. Well, the lower the interest rate, the more you get for your money. I've got somebody right now that's borrowing $650,000, a huge amount of money, but their monthly payment is going to be just over $2,300. So they're feeling it. Yeah, I can make that work. Especially I'm paying rent similarly for a place that's, a third of the size of what I want to buy. So declining interest rates has had a huge impact there.
Okay. And for people then who are buying a house and, they're wondering who they should speak with first, and, who do you advise for listeners they should have on their support team? And, what professionals should they get in touch with?
Well, I have a natural bias, but I think even if I was in a different industry, I think you have to talk to a mortgage specialist, because at the end of the day, you will need a mortgage. You will need to borrow money to help you pay for that house. Very few people pay in cash, unless they've inherited or won the lottery. You need to borrow a large amount of money. So you need to know how much that might be. So who better to tell you that than a mortgage specialist? Once you have that information, if the number seems in the ballpark of the houses that you've been thinking of, or the condos or whatever it might be, the next important person to select is your real estate agent. So if you're picking a mortgage broker and a real estate agent, that's a good cornerstone. They in turn can feed you to all the other professionals you may need. Although word of mouth is great, asking people that who they've had good experiences with. You might get the names of people to work with, but you'll in turn be led to a real estate lawyer, to an insurance broker, and whatever other professionals you may need, a home inspector, an appraiser, all those things. It starts with the two key people, the real estate agent and the mortgage broker.
Okay. And at the moment then as well, I know Patricia mentioned when she was buying a house that there was a first time buyers scheme. And I know there's still the same sort of idea going on today. How can the government help then for first time buyers, and what is the first time buyers scheme at the moment in Canada?
Well, there's a couple of things that can benefit you right at the time you're ready to buy. One is the one that Patricia alluded to. There's something called the RRSP Home Buyers Plan. So basically, a lot of people are torn. Do I put money in my retirement savings plan, or do I buy my first home? And what the government is saying is put the money in the retirement savings plan. And you know what? We'll give you a tax refund for every dollar you put in. We'll give you back, depending on your tax rate, 25, 30, 40 cents. So that's really good. You get to save $1 at the cost of 60 cents. Now, when you're a first-time buyer, you're allowed to take money out of that RSP and not repay the taxes. You can withdraw as much as $35,000 each out of that RSP, put that towards your down payment. So if there's two of you, there's conceivably $70,000 if you needed it that you could arrive from. So you save $70,000, you got a tax refund along the way, perhaps as much as $20,000 to $30,000, and you have your down payment all ready for when your time to buy. That's, I think, the biggest single thing that you can do that the government is helping you with. The other significant area is you will get a rebate on something called land transfer tax. Not every province has land transfer tax, but here in Ontario we do, and it's quite substantial. You will get a rebate from the provincial government for land transfer tax, and only to first-time buyers. So there's two examples.
Okay, and then when it comes to buying a house and credit scores, so Patricia, I will go to yourself. What should your credit score be when buying a house? So how will your credit score impact approval, your interest, and your price of a mortgage?
Good question, Grace. With a credit score, in the past it used to be 650, now it's 680, and north of 680. Having a mortgage broker, he or she's able to pull one inquiry and shop your deal to all the lenders that matches your profile. If you have a lower score, lower than 680, you can still get a subprime mortgage, but you have to have a larger down payment. There are private lenders whose you're paying more in interest rate, you're paying more in lenders and broker fees. So again, sitting with a mortgage broker, they'll be able to tell you what you can do. And if your score is low, there are ways in increasing that credit score to make that big purchase, because you don't want to do it now. You can, if you're buying a home, ask for a late closing and find out from your mortgage broker, how long will it take for me to increase my score from where it is now to where I need it to be to get a lower interest rate.
Okay, and I suppose then one of your financial goals, when you're in the process of looking into buying a home, should be probably your credit score then as well, in order to get the best rates. On financial goals then as well, and saving. And one thing I found, quite stressful myself, I'm a 25-year-old, I'm not planning to buy a house anytime soon. But one thing that kind of stressed me out a little bit is just the price of rent and cost of living. So I'm based in Vancouver, and it's pretty expensive for food and rent here. It's the same as, where I was back home pretty much, which is, a city centre. Quite expensive. But for anyone who's looking to buy a house, the likes of living close to the main city, it's kind of a distant dream, because a studio apartment, they're probably going for nearly 1 million sometimes, and it can feel so out of reach. And then on top of that, if you're saving for a down payment on your mortgage, you're not really left with much disposable income. So I suppose it's important to be realistic when you're setting financial goals. So in a broader sense then, what is a financial goal, and why is setting financial goals important when you're, say, for example, learning about your financial basics, or learning about mortgages and seeing if you're ready to buy a home?
Wow, that's a loaded question.
It certainly is. But you're putting a lot of stress on yourself, because it's very, very stressful trying to, based on what you just said, Grace, don't put that much stress on yourself. Probably just have a goal and focus on that goal. As Ross said, the RSP, get yourself some RSPs, even if you qualify to get an RSP loan, to buy some RSP to get started. But, sometimes you go off the beaten track. And when you do, just stop and think, why am I making these sacrifices? And bring yourself back to why it is that you're making these sacrifices, so you're not beating yourself up every day, overthinking, putting undue stress when it's actually out of your control.
Yes. I think you use the word sacrifice. I would say be frugal. And in a broader sense, Grace, it's okay to be 25 and not really know what your goals are. So therefore, I would practice what I call good financial hygiene. Just like good dental hygiene, as it's preventative. You floss your teeth, you brush them 2 or 3 times a day, whatever, to make sure you don't have to have some really unpleasant experiences at the dentist. Well, similarly, in a financial sense, just do all the things that you know to be right. You may not have a specific goal yet. Because like you say, it may just seem so far off. But, today you're living in Vancouver. Maybe you'll live in the East Coast some point. Maybe you'll go to a town that's more affordable. And if you've taken the steps along the way, like like Patricia said, start saving, building up an RSP, spending less than you're making, using credit responsibly, then there might just come a time when you do develop a goal and you've put yourself almost unconsciously or subconsciously in a position to meet that goal by practicing the best financial practices possible. It cannot hurt you. At the end of the day, if you don't have an element of frugality, it's going to be very hard. You do almost have to deprive yourself. That's why we see people, becoming roommates. It's not that they necessarily crave the company, but they realize that two people paying the rent in a small place is half the expense and a better chance to save. It's the other reason why we see we see two families sometimes buying homes together. It's not ideal, but they're doing it so that one day they can have their own home. So you take baby steps, always in the right direction. And one day you'll find that you're able to articulate a goal and you'll be a lot closer to actually achieving that goal than if you hadn't practiced good things in the beginning.
Ross, I just thought of something. She's only 25, so she should set the goals, and this is just a joke, on finding a very wealthy partner.
Well, and also that's all very well, Patricia, but if that partner makes her sign a prenuptial agreement, then where are you then?
Yes.
Okay, well, guys, thanks so much. I feel like we've definitely dived deep into the importance of financial literacy and the different ways that our listeners can research and, help better their own finances. So again, thanks so much to Ross for coming on the show, and of course Patricia then as well.
Thank you, Grace. Thank you, Ross.
And then as well, Ross, if our listeners have any further questions then for yourself, I suppose they can reach you at askross.ca then, is that right?
Yeah, I really put myself out there, Grace. I literally say you can ask Ross anything that's financial related. Either I will know the answer or I'll know somebody who does. And I answer everybody. It's not about whether or not I can see a business opportunity. It's just, it's sort of good karma I've learned over the years to offer assistance, even for people that think they have a hopeless situation. And so, yes, you can ask me a question. You can go to the website. All the contact information is there. It's askross.ca. Or if somebody wants to call me, it's a really easy number. It's 416-989-1000. So very easy. Either way, I'll be happy to answer.
We hope you enjoyed episode 2 of Bread and Honey. Don't forget, if you're looking to brush up on your financial literacy knowledge, you can now enroll in Mastro by Marble. Mastro provides you with free educational courses with over 30 different modules covering debt, budgeting, and improving your credit score. To enroll now, visit our website at learn.mymarble.ca. If there's any topics that you'd like to see us cover, you can now connect with us on Facebook, Twitter, and Instagram by simply searching My Marble Life or Marble Financial. If you enjoyed today's episode, don't forget to follow and rate us on Spotify and Apple Podcasts. You can also keep up to date with our next podcasts over on our website now at mymarble.ca/bread and honey. Thanks for listening.